Hey traders, this is Blake Morrow with Tradersummit, and with me today, and it's not the very first time, but the very first time him and I are having a one-on-one, I have Mr. Tyler Wood. He is the managing director of the CMT Association, and also he's the co-founder of GoNoGo Charts. Tyler, good to see you.
Great to see you as well, Blake. Thanks for having me on. How you doing today?
Yeah, I'm doing great, and it's always a pleasure to meet up with you. I love what you guys do. You know, not only at the CMT Association, because it's one of those designations. It's like, why didn't I get that 20 years ago? But I know a lot of people, desire to get their CMT. I want to talk a little bit about that. I love what you do over there and how you manage that organization. But also, I love what you're doing with the GoNoGo charts as well. It's a really cool application you guys got.
Thank you so much, Blake. Yeah, the CMT Association has been just a tremendous organization for me personally. It's about 50 years old, and it's a nonprofit credentialing organization. You mentioned Chartered Market Technician, or the CMT designation. That's put to use by asset managers all over the world, 137 countries, and about 10,000 candidates currently in the program. So things keep growing. We talk about being a 50-year-old startup, as a lot of small nonprofits are. We all have a lot of roles, that's for sure.
Yeah, well, you're doing a great job managing it over there, and I have to say it is something that a lot of traders aspire to, especially technicians, people like myself that have been reading charts for 20 some odd years. When I speak to a fellow technician, but they have that CMT designation, I hold them in that much higher regard. So now, before we continue, I want to make sure that I mention to our viewers, if you like seeing Tyler, make sure you give him a thumbs up for joining us here. If you're watching us on YouTube, subscribe to the channel so you don't miss any of this exclusive content that we bring you on Tradersummit. But we're also going to bring you some of Tyler's more recent views, or his views on the markets. So I want you all to make sure you stick around. So Tyler, can you do us a favor? Tell us a little bit about the CMT organization and what you do over there.
For sure. The organization exists for two reasons. One, we try to help people improve their investment decision-making. Do that through a lot of educational content. We publish a monthly magazine, a monthly podcast, regular weekly market reviews, as well as a double-blind peer-reviewed academic journal where we're trying to advance the discipline of technical analysis. So if you look at our alumni network and some of the great founders, people like John Bollinger, inventor of Bollinger Bands, or Martin Pring, one of the most widely read authors on economic cycles and technical analysis. These are the folks who founded the organization in the late 1960s. And then today, we still see a lot of ingenuity in terms of the application of these concepts around price behavior, right? So technical analysis in its earliest form, going back to Japanese rice pits, was a way to visualize the data that the market could provide to help you understand what was happening in terms of investor sentiment and behavior. Going back to Monahisa Homa, he would notice that rice traders would become really enthusiastic at certain parts of the day or the year. And when people were more morose, you'd see prices trade down. And so candlestick charts actually started in Japan in the mid 18th century as a way to understand what was happening day to day in those rice pits. And you fast forward now, it's not pencil on graph paper anymore. We all carry 5,000 charts around with us in our phone wherever we go. But the application of those concepts has remained really constant, right? The discipline of understanding investor behavior and that supply and demand relationship is the same today as it was hundreds of years ago.
That's awesome. Now, tell us a little bit about like the process that you have to go through to receive that designation, because it's like in a lot of cases it's like getting your master's degree or maybe even your PhD in some instances. So explain to us about that.
Well, I can speak from experience. I went through the MBA program, as most people of my generation who graduated in the great financial crisis. You realize there weren't a whole lot of jobs around, so you just keep going to school, right? And my MBA was a really firm grounding in the fundamentals, understanding managerial accounting and corporate finance. And that's how you understand a company, for those of you who are equities traders. I got to New York, 2011, I joined the CMT Association, started to learn how markets work. Very different from how companies or intrinsic value works. And so I got to meet some of these founders like Ralph Acampora and Phil Roth. And for people who are interested in the subject matter, who are practitioners of technical analysis, it provides a really great formulaic study of the discipline. There are 3 levels of exam and 3 letters to the designation. It's academically very rigorous. We see a pass rate of around 60% on each of our 3 levels. But I don't want to discourage anybody from taking this. It's designed for both current or aspiring professionals. So we have some folks who are 20-year veterans of the markets and they're running big hedge funds, but they realize that they need a more firm understanding and really a broad coverage of all of the subject matter in our candidate body of knowledge. So it's a textbook at each level. We publish those with John Wiley and Sons. It's about 1,000 pages of reading, and we recommend about 100 hours of study. So we do have an academic partner program. We've got university students who are still in undergrad sitting for that level 1 exam. And like I mentioned, 20-year veterans of the market who are coming back to earn the designation as well.
I think it's awesome. Sorry, I didn't interrupt.
No problem at all. What I found going through the CMT program, obviously there's the technical analysis that you learn on the trading desk or in the research department or as a junior portfolio manager. But when you go through a structured course of study, you're not just learning, how moving averages are calculated and, what goes into the MACD equation, but also how to apply these tools in a disciplined, systematic approach. I can't tell you, I've gone down the rabbit hole and you see some people's charts where they've got, 1,000 studies on their lines going everywhere, and they've really overcomplicated their analysis and they get stuck. There's an analysis paralysis component. So we talk about a disciplined approach to using the tools that most help you with your objective, your time frame, but then also being able to understand objectively what those signals are telling you. So what are the 30, 60, 90-day returns when you get a simple moving average crossover from a 50 to a 200 day? And that application portion of it is really important to us because you can learn a lot of technical analysis by reading the textbooks, but really you want to roll up your sleeves and actually get your hands on the subject matter, do some charting and do some trading using these tools to really, solidify your understanding.
Well, I think like I said, I think it's an awesome designation. It's one of those, if I could just had an extra few hours a day, every day, I would be knee deep in that. But and that's not to say I won't be at some point. But I also want to talk to you about not just about the CMT organization, but you're also association, excuse me, but you're doing some pretty cool things with some of your alumni, and then also with traders that are coming of age, if you will. Tell us a little bit about these trading competitions that you have.
Yeah, so we do a lot of things at the organization, including outreach to professors, folks who are, teaching me in the MBA program thought technical analysis was voodoo, and I will attest that the academic world has changed dramatically, largely because of the Nobel Prizes being handed out to behavioral economists and cognitive psychologists like Amos Tversky and Daniel Kahneman. So the academic community has really come around. And one of the things that we launched as a global property this fall, starting September 1st, we have a trading competition for students in our academic partner programs. And so they're actually able to use these tools in real time, try to understand what it is that they've been learning from the textbooks. And I have to say, there's a lot of my MBA program that was in one ear and out the other. I don't use it all every day. But with the CMT curriculum, it's very applicable to any asset class, any time frame. You get to use the tools right away. And so the trading competition is a great way to give those students some practical experience trading in live markets. And we'll run that through November 1st. We do track a leaderboard, and there's some prizes for best performing student in that trading competition, as well as those who had the best risk management, lowest drawdown, those kinds of things that we're tracking throughout the program. And we're going to do it actually twice a year, Blake, every fall semester, September through November, and then we'll do it again in the spring semester. So this is going to be an ongoing competition and a great way for students to learn technical analysis the right way, which is by doing.
Yeah, that's great. You know what? I'm gonna just give you a pat on the back because I think you're such a great spokesperson for the association, hands down. Yeah. But you know what? I want you to prove to us a little bit what you know, and I'd love to see what you're looking at right now in the market. See, it's a very challenging market right now. You got equities that are lower based on some inflation data that came in much higher than expected yesterday. Today, the PPI numbers came in a little mixed. The market's consolidating, but you have some views on what you're seeing here, and maybe you can show us while you're doing this how you're feeling about the markets, and show us a little bit about your go/no-go trends charts that you've developed yourself.
Absolutely. So I think you have to start from the basis of technical analysis can be very, very broad. But the core components that we talk about in the CMT curriculum, and what's really important to us at GoNoGo Charts, my colleague Alex Cole was a 16-year product development manager at Bloomberg. And what we've both learned by sitting at the right hand of top mutual fund managers, long-short equity managers, research analysts, and traders alike is that you have to understand trend. The most important concept in technical analysis is identifying market trends so that you can profit from the meat of the move. And from there, you can add things like momentum, volatility, volume to help confirm or spot those divergences. So if we're just looking at a chart of the S&P 500, obviously this year has been extremely challenging. These are daily bars. And what we did was we took all of the best tools of technical analysis. And when I say best, the ones that are most widely back tested and proven, the ones that are most widely used, things like moving averages and Donchian channels. And as we were talking about earlier, you can add study after study after study to your chart, but you start to cloud the price panel. And both Alex and I are strong believers in the early works of Edwards and McGee and basic pattern analysis and important price levels. Being able to spot support and resistance levels is really important to us. So what we're looking at in the top panel is a blended composite of about 11 technical indicators that give us the idea of trend. And so when we're in these purple colors, we're in what we would say is a no-go trend. So if you're thinking of the long-only investment manager's perspective, and we designed this and named it after just like a basic pass-fail system, right? If you're NASA and you want to launch a rocket into space, you want to make sure that the environment is really in your favor and you're go for launch. So when we're in these pink and purple, we've got strong form and weak form of a downtrend. That's our no-go conditions. And what really jumps out to me about the application of these tools is seeing how many investors get caught up in these relief rallies. Now, if you're a short-term trader, absolutely, you can make a killing off some of that volatility. And some of the best days happen in a bear market, but we don't want to be snapped up in these seductive relief rallies. So we're a no-go through this whole period. We did see enough evidence come into the favor for the S&P 500. We've been in a go trend the last several weeks, and then more recently really rolled over hard. And what's happening in the bottom panel gives us that early indication of what we might see in price trends. So the interplay between this go-no-go trend concept and the go-no-go oscillator is really what we look to. So a simple momentum reading, if you're familiar with like RSI, you look for areas of overbought and oversold. Well, Wells Wilder developed the RSI in the 1970s when US equity markets were in that really tight range bound space. And so the idea was, if we get to overbought, there's our sell signal. We're going to come back to the bottom of the range. If we get to oversold, that's our buy signal. Well, folks like Connie Brown and many others have built off of that early work on momentum to understand how you would use momentum in a trend. And so what's unique about this is this objective zero line. And that tells us when all of the inputs are in their neutral territory. So GoNoGo Oscillator built the same way, a blend of lots of momentum indicators. When they all fall to zero, we know that we're in neutral territory. And in a strong uptrend, if we just back this up to what we were seeing in the markets in 2021 and 2020, you see this period where the oscillator rises to an extreme and comes back to test the zero line, but the trend remains in place. And each time we get to the zero line, we find support and we come back with a momentum resurging in the direction of the trend. So for trend following investors, no matter what your time frame is, you want to see those conditions where you're in a trend and you see momentum come back to confirm the area that we're in. So let's go back to where we are right now in the markets. That rollover back to a no-go trend, rollover back to a no-go trend was accompanied by the oscillator breaking below the zero line. We have negative momentum or enthusiastic selling, fell out of the trend conditions. And then the other piece that we blend into this, right? We want to simplify what's on our chart, but not lose any of the information. So we blended volume into the oscillator itself. So here you have a normal volume, And when it turns to the dark blue, sorry, you can't really see my cursor, can you?
No, I can. Yeah, we can
can
see it. Yep.
Okay. So when we're in dark blue, we see heavy volume. So these down days, these sharp sell-offs were accompanied by heavier than normal volume. We came back up to test the zero line, right? And so we know the concept of polarity says that what was support once broken then becomes resistance. We expect resistance at the zero line in this no-go trend. And sure enough, we have a resurgence of momentum in the direction of the trend on yesterday's bar, sharp sell-off. And I guess
I was going to say, if I'm putting two and two together right now, we're in a no-go trend, which is a bearish trend.
Yep.
Your lower pain, we went back to the zero on your oscillator of that you put together, which gives it the freedom, the market the freedom to run again in this bearish trend if it chooses to do so. And so for me, as a participant in the markets, I'd be looking at this chart that you're showing me saying we might be resuming the downtrend soon. Am I reading that correctly?
You are reading that correctly. We are in the downtrend, and what we know about markets is that when they are trending in either direction, we tend to see further price activity in that direction. Now, of course, we've got a support level here at the prior low, which we're basically testing today, right? Our price panel right now is right at that support level. So would I see a ton of additional downside? Certainly once we break through that level of potential support, right? There could be some buying opportunity or some opportunistic buyers at these levels. But once we're below this support line, I'd be looking down to the 3,700 level, 3,750 maybe as our next area of support. But that's the basic concept of trend following, is that we don't like to predict what's going to happen in the markets. Instead, we just try to react responsibly to the data that's before us. And for trend followers, if you've got 30% of your losers, but they're very small, and you have outsized gains, if you stick with the trends when they're moving in your favor, you can eat up those small losses. The biggest point that we emphasize throughout the CMT program and with GoNoGo Charts is that you just want to avoid that risk of ruin, right? You got to trade another day, and so risk management is job 1, 2, and 3.
Paramount. All right. I've spoken like a true trader. So show us gold really quick, because gold is, getting really close to some major key technical levels. That, if we break below 1680, it's going to open up a whole swath of downside. And boy, holy cow, that's all purple, which isn't a good thing. And we just got back to the zero line. And based on what I'm seeing here and what you told me, I got to be bearish.
At the zero line.
Yeah, back to the zero line, and it looks like we might have a resumption of trend lower and eventually break down. Is that correct?
Yep. And we actually use data visualization to try to help signal this to traders. You see this little red circle. So that icon is based on the interplay between GoNoGo trend, that top price panel, and the GoNoGo oscillator. So when we see the resurgence of negative momentum while we're in a downtrend, to me, this is an opportunity to add to your short positions on gold.
Wow. Okay. Well, I'm going to throw the last one to you, and it's going to be a bit of a monkey wrench because we've seen a lot of two-way price action. Give us some crude. Show us what you're seeing in crude, because crude's been a tough one for the markets, I want to say, in general. And thank goodness I'm not a crude trader. But oh boy.
Right. It's funny. We were at the CMT Symposium in DC this spring, and talking with a lot of folks about what a banner year it's been for oil. And the folks who are in commercial hedging and folks who work for Governor, Trafigura, a lot of the commercial trading houses, they've had one of the worst years on record because of the volatility and just the fact that they can't predict what's happening. And obviously, the story in Europe has been all over the headlines. This has been a really tough market for everyone, including the commercial outfits. So I'm looking at USO. Let's pull up WTI real quick.
Sounds great.
There we go. See if we can get this computer to respond a little faster for us, Blake. Apologies. Again, these are all daily charts. And here we're in a go trend on WTI. So the US oil ETF certainly reflecting much more downside than what we're seeing in. Whoops, this is not right. Hold on.
Yeah, that's W&T offshore. There we go.
There we go.
That's the one.
I was going to say, I was going to have a really hard time explaining that chart, Blake.
Yeah, I was going to look at that chart saying, wait, but I don't think that's it. Okay, there we go. There we go.
Here we go. All right. Inflection point. We're in a no-go trend. We've had some strength yesterday. We're in the weaker form of a downtrend, meaning all of the composite inputs are painting these lighter pink bars. So still in a downtrend, but seeing some weakness to those trend conditions. Here we've got the GoNoGo oscillator, heavy volume on this sell-off, but heavy volume on the rally as well. And we're right back to the zero line. So what Alex and I would probably do is jump down a time frame. So if we just look at, let's just take a 2-hour chart. Oh, come on. We're at end of day data. Sorry.
That's okay. Just keep us on daily. It's fine. But you'd actually go into a smaller time frame.
Yeah, multiple time frame perspectives are crucial to everything we do, right? So if our primary trend is looking at a weekly or a daily chart, then we'd look for the intraday charts to give us a signal about entry points. What we're seeing right now on the daily is that we're right back at the zero line for GoNoGo oscillator. So we're at neutral on the momentum readings on heavy volume. This is obviously, I mean, we got a lot of trading activity happening right here. What looked like a break of the support line, maybe a little fake out, because we're back above that area of support now today. And so we'd be looking to see our leading indicator from the GoNoGo oscillator. We'd like to see if that breaks through to the upside and we see positive momentum. That could be a real strong sign for the bulls. If we're rejected here at the zero line, then further downside for crude for sure.
All right. Well, Tyler, I love what you're doing with both with the CMT Association and with the GoNoGo charts. So tell us if I'm a trader and I'm listening to you for the very first time, what's the best way to find out more about you and follow your work?
Absolutely. So if you're interested in GoNoGo charts, the website is www.gonogocharts.com. The charting tools are available on tons of platforms. So if you're on Metastock or TradingView or wealth charts or stock charts, you can find those in a lot of applications. But we also do a lot of institutional research a few times a week, making that out to all of our institutional clients. You can check all of that out on the website, and there's tons of educational videos. If you've got the time and really want to learn how we use these tools and how they were created, there's lots of information to seek out there. And then on the CMT side, I would encourage everybody who's got a trading account to at least pick up the level 1 textbook, whether you're ready to sit for the exams or not. It's just a great overview and a compilation of some of the best authors in the space, so that you have a real broad understanding about what technical analysis is delivering to you on whatever charting application you use.
All right, Tyler. Well, I'll tell you, you guys don't know, we might be talking to the next John Bollinger right now. So this is great. Tyler, thank you so much for spending your time with us here at Tradersummit. Or again, if you like what you saw here and some of the views he gave you of the markets, make sure you give him a thumbs up, subscribe to the channel. Tyler, I look forward to having you as a guest more often than we've done in the past.
Absolutely, Blake. And we'll be seeing you at CMT events all over the globe here real shortly.
Sounds good.
All right. Cheers.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.